The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us anywhere on your mobile phone at TFNN.mobi, and you can listen to us, right there on your computer at TFNN.com. Go to Tiger TV and check out the archives and everything else. All right, let's check out where the markets are at right now and see what all we got going on. That's some pretty crazy volatility going on with some of the indices this morning. Looking at the S&P right now, it's up a mere 4 points. We got the Russell up 7 and the NASDAQ up 26. Dow's currently up 5 points. And, we got the earnings are going to be kicking off today. I believe we got Alcoa kicking off, don't we? So, they got kicked out of the Dow, though, so they don't have as much of the oomph that they used to have. But Alcoa AA, let's see, earnings, just to verify. I just want to make sure I'm right. But I believe they have their earnings report date today. And so I'm just checking to make sure. They're on 4.8 last year. April 8, 2014. Yeah, okay. So Alcoa is expected to release earnings today. The report will be for the first fiscal quarter of March 2014. So they'll be kicking off earnings season. And so I like to track those, watch those, see what's coming out, keep you up to date on those. Again, they used to be a lot more oomph and all that. But let's see here what we got. What are they a part of now? And what indices are they in? You go to finance.yahoo.com, has all sorts of great little tools built into it that are free. And one of those, you can go and you can see all the sorts of different info about a specific stock. So I guess now it kicked off with JP Morgan. Somebody's correcting me on that one. But and somebody's trying to, write why Alcoa is still important. So you got to love all that. But you can go down here. You can get technical analysis, news and info, press releases, company. And what I like to look at, okay, here we go. So go to profile and see. See, it doesn't have. It'll tell you that the sector it's in, the industry it's in, index membership. Okay, so that's the key that I'm looking for right there. Index membership, not applicable. Okay, so that's right under profile. Whereas we go over to say Google, right? Go to profile. Sort of obvious. Well, let's see if they have theirs. They may not have all their stuff updated right now. That's pretty wild. I used to use this all the time for checking those out because they're even saying not applicable. So, and they're obviously part of the NASDAQ 100. So, I'll have to look and see how they redid their website. But they used to. Let me see if they put it in a different spot. But that's a pretty interesting update. Usually, you just go right there and it tells you exactly what to look at. Okay, indices that include Google. Okay, so they put it under components now. So they just moved the location. All right, so you got Better Investing 100 total routers. You got NASDAQ Computer, NASDAQ Composite, Stanley Tech, NASDAQ 100. Okay, the NDX. So also the NQ. Okay, would be the other thing that we'd be looking at for that right there. Notice, let's see, we go here. No data available on ETFs with Google as a top 10 holding. But so we'll get back over to Alcoa now, just so we can double check that one. Okay, and go down here to components, and you can find out what's it in. See, it's in quite a few things, but it's not in the NASDAQ 100. And I like to find stocks that are in the NASDAQ 100. It's not hard to find stocks in the NASDAQ 100. You just Google NASDAQ 100 stock list. Okay, but just whenever earnings are coming out, if you're like, hey, will this impact maybe an indice or an ETF that I hold? Then this is a simple thing to look at and to see what earnings are coming out. And, for what earnings are coming out, there's a lot of resources like earnings.com, which Reuters bought out recently. Let's see here. Did they break it? We'll see. I'll try it again. Let's see. Earnings.com. And yeah, it's like they broke their own earnings website. But they used to have a big earnings website up there, like literally this morning. They had an earnings website up there, so maybe they're updating it right now. Maybe they're getting ready for earnings week too. Everybody's changing their websites up. But anyway, so you can get a list of the earnings, and they used to be a really cool feature on here, so I hope they bring that back up. But it'd give you all the information. You had everything. There's a bunch of other stuff you can check out too. Earningswhisper.com. So this can be a great one. Checks out, basically what are the whispers, what are the thoughts on what, the reports are going to be and how they're going to come out. So that can be, really helpful. They got free service and report services and all that. And I don't get too much into it. I used to trade earnings like crazy, okay? Like I loved earnings. That's actually how I quit my day job, was trading earnings. I use stocks, stock options. And wasn't necessarily, I don't know if it was the brightest thing or not, but it worked. So, but anyways, so I'd use that. There's another cool website called optionslam.com. I'd go over to that one, and a lot of these are mostly free sites. Like they have a little paid upgrade or whatever, but they're mostly free sites. And they just tell you basically how far does a stock move after earnings. So sort of like how I talk about how far does a stock move after, Forex. Like how much far does an indice move or a Forex pair move after a government release? They sort of do the same thing on earnings. And so you can go in and, let's see here. Got the earnings history tool. I don't know how much they give away free still, but they usually give away. There's Alcoa, okay? So there's a, overview on Alcoa, and then you can see information. They'll show you like, hey, here's the earnings date, here's the pre-earnings close, here's the after-hours move, the opening price, the high, low, close, max, final, one trading day after earnings comes out. And then here's the price movement through options expiration. So it tells you how many days there are till expiration. So it's pretty cool. A lot of great stats made really, really simple. And so if you are an earnings trader, if you want to trade earnings, it's a pretty cool way to trade them. And you need to have the money in your account because you're day trading usually. And because usually getting into one and getting out of another and, opening and closing and all that stuff. But plenty of volume on Alcoa to trade it. And let's see here if I can maybe pull up a chart. So right here, just just have a little fun, doing a little different thing today. And let's see, I think I have all the stock indices feeding into this one. And anyways, but you can go in and I don't have any deviations on it. Not yet. I will next week, I believe. So I think we'll have deviations on everything next week. But let's see here. What do we got? So yeah, been riding it short quite a bit, but it's starting to turn around like it's wanting to push up along. We'll see. But anyway, so you can go in and use stuff like that. What I used to do, and this is just, I'm going to tell you this is definitely in no way a recommendation, okay? But what I used to do is I used to go in and I'd use like a tool like this, and I'd look at all the upcoming earnings for the week, and I'd look at which ones consistently moved the most, and ones that had options on them, and ones that their options were, they had weekly options, ideally, because I could get them really cheap. And yes, I knew there was implied volatility and volatility crush issues and all that, but I'd actually look to go in and strangle the things right before it. I'd do like 3 or 4 of them. And a couple of them usually wouldn't move at all. I get a little bit of a volatility crush on it. I'd close it out, take my little profit I had left, and then I'd usually pour all of the money into one of them that was just going in one side, So I'm not saying it was the wisest move. It wasn't necessarily the best move, but it worked, And I just kept piling it on Apollo. I used to work for Apollo. And that was a long time ago. But so they got their stuff coming up. They've been getting hammered. So they're just they're having a rough time. But looks like they're starting to come back, though. They got a little bit higher price. Price has been moving up on them, so that's good. But anyway, so a lot of different earnings coming out this week. They're traded over there on the NASDAQ. But you can go and you can check all this stuff out, find all this information out. And this is, like I said, this is what I do on news. So I take this equivalency on this, but I apply it to news, and I go, hey, how can I do this with defined risk, with out paying for a week of option premium, or maybe I can collect that option premium. And so I'll trade the news on the indice futures, on the Forex pairs, and I'll go do all that, fun little research and put all the pieces together. And so, that being said, what do we got? Well, we got a pretty light news week, okay? So going in, I'll just throw up Forex Factory. It's one of, you got Forex Factory, you have, investing.com. These are all just common calendars. So you go right over here, you go to, tools, economic calendar, okay? Right there, so, they rate stuff, and I don't know what they think makes something important besides maybe it's important in the long run. And that press conference, that came out a lot earlier, I think, but the actual numbers coming out last night. But had Japan, it released, this whole monetary policy statement out of nowhere. But anyway, so all this information you go through, you look at it, you got to figure out what's important, what's not, and really try to sift through it all. And, for the week, I got to come up with, okay, out of all the trades that are out there, which ones are worth it, which ones don't have consistency. Just because, a trade is there doesn't make it a great trade. And so I want to find out, what has the highest probability? What has the best profit ability? Which one can I realistically execute? Because I'm not going to get up at 4 a.m. and place a trade. I got enough trades during the day. I don't need trades at 4 a.m. Now, if I can put a trade on at midnight and put my take profits in and go to sleep, I can do that. Okay? Then, that will work. But as far as, what do we got going on this week? And let's see, today, like I said, really last night to go over, let me pull this yen chart up because this was just a little nuts. Go ahead and open this up. And last night, that might even be a harder chart to read. I might bring it up in just a normal, a little bit easier to read format. Go over here. Let's just pull up the U.S. yen, because like I said, last night they released all this monetary information, then they had a nice press conference. So if you were a Forex trader, you could have got slammed on that. But it's a nice thing about being a Nadex trader is all your risk is capped. Doesn't mean you can't lose. Obviously, you can always lose. But you have capped losses always built in. All right, so last night, we go in, and there's just these big spikes. Zoom in, because they don't look big unless you're zoomed in on the chart. But, you really notice them by the, the breakouts. But it's like right here, it just flew right down. And then you got this spike up and another spike up. So you got some pretty big spikes going on last night on the news. Wasn't scheduled news. So what we're going to talk about today is scheduling news. But we got a big thing coming out today. I'll talk about it here in just a minute, okay?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So anyway, we saw the market flying on down. It's been moving. I didn't even see this perfect short patterns happening all day here on the one. But going over and, looking at, what's happening. Well, with China, what you have going on is they're really trying to keep their currency from being, determined on its value by an exchange rate. They want to keep it artificially low, because what that does, it makes things really cheap for us to buy from them, which also, puts a burden on our own manufacturers here in the U.S. because they can't compete. And it makes it where the people there don't have the money to buy stuff from us because their currency isn't worth anything compared to ours. So they're keeping it artificially low. So what's going to be the response to that? How are they going to handle that? Well, G20 meetings, they're trying to figure out basically how to, they never do, but they're trying to figure out how to strong arm, because the G20 meetings are going on later this week, starting on Thursday, and they want to figure out how to get China to put the one on the FX market. And to allow Forex to move that around. So it'd be interesting. We get that in there, we get a whole new band of currency. There are places where you can trade it, but like really liquid, markets for trading it. And it's a big currency. There's no reason why it shouldn't be massively liquid. So it'll be interesting to see if they go there. And anyways, so we got that. What about tonight? What do we got going on? What can we do? Is there any kind of trade we can put on. There is one that I'm looking at for this evening, and I'll be putting it up on my little FX calendar for the evening here. But it's going to be on the Aussie. So what's going on tonight on the Aussie? We got the home loans report. Okay, so right here, looking at today, this evening, Australia has the home loans report. And is it a big mover, a big shaker? Okay, no, it is not a big mover, a big shaker. Not really at all, which is great. Okay, so why is that great? Because I can take advantage of that. I can go in, I can make money off of that. And so I'm looking, I go through and I look at all the reports and I go, okay, well, how far does it usually move by what time? Well, the report comes out at 9:30. That basically is going to give me either a 10 o'clock or an 11 o'clock expiration. And so just, looking through and going through this really fast with you, just trying to fly through it, okay? So last report, it didn't really matter when you got in, but if you got in at any time after 6 o'clock, you'd really be looking at about a 10-pip move, high to low, like 10 pip up, 10 pip down during the entire time. So that's like a perfect iron condor. If we go on down, what about the report before that? Little bit bigger move. Okay, we got about 50 pips. And let me see, where did it end at? I can see it 10. Let me put it a little bit further forward for myself. So I can see 11 o'clock on it. 11 o'clock, we got, it's about 50 pips, so it was a bigger move. One before that, we got right around 40. But then, we got 20. One before that, we got 5. One before that, we got about 20. And if I just keep going back and looking at each report, one before that we got, let's see here, depending upon 16 to 20, depending upon what exact time you're looking at. The minutes, there's like about 10 tick move there. Then we got about 15. One after that we got 18. Let's see, one after that we got 25, 12. And we did have one that was just massive, okay? So the massive one we had was, by the way, okay, I hate to bring this up in the middle of saying, hey, this is a great iron condor trade, last April. So last April, it was a big move. It was like an 80-pip move, okay? So, and it didn't look back. I mean, it went down, it went flat, and stayed flat, and then just trickled on down for the rest of the morning from there, okay? So, what does that mean? How can we use all this information? Is there any kind of consistency in anything where we could maybe see that big move coming or not coming? What number impacts it most? Well, I'll go through what I'll do is I'll look at all the expectations. Okay? So I'll look at all these expectations. So we'll just look at, like the last year here. Okay? So we'll look at basically April, to current. And so looking at all those expectations, put all those pieces together, and going, okay, well, last April was pretty massive. And the forecast was 1.5. The actual was 2. We broke it by a 0.5 deviation. Stay right there. We'll come on back, and I'll walk through sort of, what you might want to look out for in case it is a big move to help limit those losses. But also, 10 out of 12 months, rock solid trade. All right, stay right there. We'll be right back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And so checking out where everything's at, we're going through. We're talking about this Aussie dollar news announcement, pending news announcement coming out tonight, looking over it all. And, I go through and I'll look through and see if I can find any kind of pattern in the news reports. Sometimes I can. Sometimes it's just crystal clear. Other times, I mean, the news will go up when it goes up. The news will go down when it goes down. The news will go up when it's a good report. It'll go down when it's a bad report. When that happens, there's really nothing you can do. You literally just go in, you go, okay, what's my average range? What's my expectation? And you take the trade. Okay? Let's go through. Let's make sure we have any other news trades set up, and then I'll go through sort of maybe a little Iron Condor example for you that you can use to help you apply it to Nadex tonight on this strategy. So looking at what else we have before I slow down and go into the Iron Condor on that. One, again, we got the Iron Condor on it, so it's going to be like 30 ticks. But what other potential trades? The two big trades we have, I guess we got the Australian employment change. That's tomorrow night, so I can cover that during the day tomorrow. We'll also have the Bank of England instead of last week, which is sort of odd. It's sort of flipping up how they're doing it. But they'll, because usually they have it like the same time as Europe. But I guess maybe they want to stand on their own light. But they'll be having their Bank of England interest rate will actually be this Thursday at 6 a.m. without having Europe after it, which should help it not get stunted by the Europe report coming out. So, because what will happen is traders will come in, but then they'll back off because, like Europe's about to release their interest rate in their press conference. So now it gets to stand all on its own 2 feet. And okay, so those are the 2 main reports. Other reports that I might be looking at, that's pretty much it. So, I mean, there's a couple like British reports. You got, trade balance, and RIC is house price balance coming out on the pound. Those are probably at best. Just looking over all of them. You can get some weird moves on those. I'd just stay away from them. Okay. So, yeah, we'll just ignore those for the moment. All right. Well, that's good. That lets us focus on this one trade. And so, how does it work? Let's go on, and, you log on. You go to TFNN.com. Okay? And then you hop over here, and you click on the Nadex banner. And click on Trading, Demo Trading Platform, and put in a username, first name, last name, phone number, email address. Click Apply for Demo. Check your email. Then come on back and log in. And then to get that account extended, by the way, just go to Create Account. It's only $100 to fund an account. 1 trade funded. You can call them, and they'll extend your demo for a year. Okay, so if you fund it and place a trade in the live account, they'll extend your demo out for a year. And then let's see here, going over, then you'll click the demo account button down here. Then you'll type in your login ID, and then you'll type in your password. Okay, you log in there. And so now once you've done that, then you go, okay, so, I want to do a spread to do an iron condor. Which one do I have to do? And let's say I want to do an Aussie, so I'll go down to Forex spreads. But now I have a problem. I got 3, 6, 9, 10 different spreads currently available. Why is that a problem? Well, basically because I have to go through and do a lot of math on a lot of things. So to make life a little easier, I'm going to use the spread scanner. We have that available as well for over at TFNN.com. And so you'll log in to the spread scanner and check that out. And let's see here. Let me go in. I'll open it up for you. We'll look at it together. And there we go. All right, so once you're logged in, you just click on the, we have all sorts of tutorial videos and everything in here. But go here to the spread scanner, and then we're going to choose what instrument we want. We want the Aussie dollar. Okay? So pretty simple. So we're down here on Aussie dollar, and now that we have that, what we're going to do is we're going to try to find an iron condor. Now, right now, I'm not going to try necessarily, I don't know if we're going to find one because we got all this market activity already. So we're doing this tonight before anything happens. Okay, so like at 6 o'clock, you could be looking at the 11 o'clock expirations. Why would I say to do that? Well, there's an advantage and disadvantage, okay? The advantage of the 11 o'clocks is that there's going to be more time until expiration, so you're going to get more money, more premium for doing the trade. The disadvantage of doing it is that there's going to be, how do I put this? The main disadvantage is they're going to be wider. So technically, there's more risk. Okay? Now, that's if you held the thing all the way till expiration. So if you're worried about the additional risk, you could always wait until 8 o'clock and choose the 10 o'clock, or 9 o'clock and choose the 11 o'clock if you wanted to. Okay? And it have a 100 pip wide marker. The problem is the less time there's till expiration, the less money you're going to get. So you could actually be taking on more risk by getting less money to hedge yourself off. And so what we're going to do, I'm going to find something that's a little bit more volatile, like, natural gas. And then we're going to go in and we're going to find ourselves a couple spreads. There we go. So there's one, except for I'm going to go the opposite direction. I'm actually going to find things that have a really low reward, which sounds really funny. It's like, why would you want one with a low reward? Well, that's basically what an iron condor is. So there's a low reward sell. Do I have a low reward buy? Let's see here. It's like we're having a hard time finding that. All right, there we go. Well, no, that's a high reward buy. That ain't gonna do us a lot of good if I put that on. It just basically make it where we're like synthetically short. On the buy side here, is there anything? That's about as close as we can get on the low reward buy. That's where all the strikes are. Let's see if we can find one on crude oil. Okay? So this is best done in the morning, by the way, or like right in the evening where you got hours left until expiration. All right, crude oil. What about that one? Where does that look like in relation? Okay, we'll go down here. I got to line up. That could actually work decently well. But, really, I mean, that's a little more advanced iron condor, so you're actually crossing over them. So it actually takes quite a bit for you to lose on that trade. But I'd rather get one with a little more premium built into it. Okay? And so, let's see, what else do we got that has some good premium in there? Maybe we'll get a pound yen. Try that out, see if we see anything that looks worthwhile on the pound yen. And if not, I'm just going to go through the example with you and teach you, because there may not always be a great example. All right, that one's pretty close. Let's see here if we can get one that has, just like I said, a low profit. That's not going to work. What about that one? Nope. Let's see here. Here. Getting closer. Okay. Well, here's the idea. All right, so let me, just, like I said, go through and teach the example. Let's say I have 20 pips of profit on one side, and let's just say I have 20 pips of profit on the other side. Okay? So 20 pips of profit here, and I go over here, and again, I got 20 pips of profit on the other side of the trade. I wish there was a perfect one to show you. That's the same contract. Okay, so if I have 20 pips of profit on both sides, and I pull up any contract, so if let's just say I pull up the Aussie. Okay, so I actually chose Aussie dollar, or Aussie yen, doesn't really matter what I pull up. Aussie yen, Aussie dollar, Aussie whatever. But I am focusing on Aussie, just because that's the thing I have the stats on. I am working with the trader on building a Forex engine. Actually, it's not a Forex engine, it's a news engine. So we'll have stats on every Nadex tradable instrument, which is, S&P, NASDAQ, Russell, Dow, FTSE, Nikkei. Going on over looking at the DAX. We'll have gold, silver, copper, oil, natural gas, corn, soybeans, and a few others in the mix. But let's see here. What else do we have? Let me bring it up, and I'll show you the iron condor. I just want to make sure I put this whole iron condor picture together for you, and just practice these. Mess up on them. Okay? Demo trade them. It's okay. Make the mistakes. And get the questions, and then let me know your questions so I can help you. But let's see here. Oh, the other big report, we have the AGS report tomorrow, so be very aware of that tomorrow at 12 o'clock. Just a side note in that one for you. Okay, let me, I'm going to get rid of just everything off this chart. And then what we're going to do is, let's just say it's 6 o'clock right now. Okay? The only thing I want on here is my shortcut for drawing. And we're going to say the market is at, we're just going to stick it somewhere right now, it's 93.60. Okay, we're just going to make our math really easy. Okay, so it's at 93.60. That's the current market price. And then what we're going to do is go, okay, so what if I were to buy, okay, below the market and sell above the market? And we're going to buy at 93.40 and we're going to sell at 93.80. Doesn't that sound nice? Buying higher than the market, buying lower than the market and selling higher than the market. Isn't that what we want to do as traders? Anyway, that's the whole goal, right? Buy low, sell high. So let's do it at the same time. Okay? So right there, if I, sold at 93.80 and the market's at 93.60, and I'd get $20 for that, at least, maybe more. Okay, but I get a solid $20 if I sell 93.80. That's a $20 profit, and I could get more if I have the other side on too. But let's just say $20 profit. If the market's at 93.60 or below at expiration, I will make $20. Now this is not a binary. Okay, I'm doing a condor. If it's $1 above that, then I get 19, 18, 17, 16, 5, 4, 3, 2, 1. 0, and then start losing $1 for every tick hits above 93.80. Now, don't forget, I'm also buying the one below it. So for every tick that it is, basically if it's 93.60 or above, this one will make $20. For every tick it's below, it'll make one less dollar. So, one tick below, it's 93.59, it'll make 19. 93.58, it'll make 18. Then on down till, it's making $3, $2, $1, and it's starting to lose ticks. Well, remember, I sold 20 ticks above, I bought 20 ticks below. If it expires in the middle, I make $40. So I have a $40 max profit if it expired right in the center. Don't really expect that to happen, but that's okay. So if it expired right there, I get max profit. Where would I actually no longer make money? Because my break-even before on the sell was at where I sold. The break-even before on the buy was where I bought. But now I have additional money coming in. So really the break-even is 20 ticks higher. So if I bought this one, I made 20 ticks, and I sold this one 20 ticks up, and the market went up 20 ticks at break-even, it'd actually have to lose 20 ticks because this one made 20 ticks. So again, if I sold it 20 ticks higher, it'd have to expire right here to be break-even, and it'd start losing a tick above. But since I'm making 20 ticks on the one I bought, then it's making money. The overall net position is actually still going to be profitable. So if we got this one where we sold it right here at 93.80, then basically what you could say is you'll be break even all the way up to 9,400. Okay, so 40 ticks up. So you'll actually be break even up to that point. And then if you go here and you sell this one, it's making 20 ticks, making 20 ticks. This one's making less money. Okay, so that one's at max profit. This sells at max profit at 93.60 and below. And now this one's losing. You're not really losing right now. Now it's just making less than 20 ticks. The one I bought is now making less than 20. Now the one I bought, we're down at 93.40. Okay, right here. So now that one is basically at break even. Now it's losing money, but I remember I made $20 on the other side, so it can lose up to 20 ticks because the other side made 20 ticks. So on down here to 93.20. Now I have a big break-even range. I'm actually break-even from 9,400 down to 93.20. That's a pretty nice range. That's an 80 pip range where I'm break-even. Okay? So literally between these 2 points, not losing a dime. Okay? So nothing to worry about at all. Again, complete break-even between these two price levels over here. So basically 93.20 to 9,400 over there. Okay? So this is you can call this my green zone, whatever. I mean, I'm literally making money, or at worst breaking even, right inside. If the market expires anywhere inside of this range. And when you get what I just put down, okay, when you pick up what I just put down right there, you start seeing the power of iron condors. An 80 pip wide range where you don't lose money. Wow. Okay, that simple. So now, what about how do you handle if it does go outside of it? Well, that's what makes it even cooler. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And, okay, so we're just checking everything out, looking at all of it, figuring out what to do, where to go. But we're going into iron condors right now. And so what I talked about is, hey, you make $20 on the buy side, you make $20 on the sell side, and you can't lose more. You know, so basically what happens is that caps out. Well, if you lost $20 on the buy side, but you made 20 on the sell, that covers you for 20 points, okay? 26. Same thing on the sell side, back and forth. So you get 40 points up, 40 points down. That gives you an 80-point range where you can't lose money, okay? And then if it goes higher than that, you only lose $1 a tick. It's not like a butterfly where you could get just hammered on the thing, okay? Or, you know, classic iron condors. I mean, you can get nailed on a lot of stuff. So only $1 a tick. So if you can make up to 40, what would that, you know, and this is your break even, then losing 40 puts you where? 94.40. Okay, so this would be like you're right here. So let's grab that line again, but 94, 40 right about there, okay? So pretty much 94.40. And then we go down, so this will 93.20 down to about 92.80, okay? This is my 1-to-1 zone, all right? So right here is where I'm losing money, and basically I could lose as much as, basically, as much as I could make. Well, what is that zone? If I go to 92.80 all the way up to 94.40, and that is huge. And by the way, we're only talking about $20 here on each side. We're not talking about some massive premium. We're not talking about FOMC and NFP premium levels here. Okay, so 92.80, and then minus 94.40. I mean, we're talking about 160 pip, an 80 pip up, 80 pip down move before you would actually lose a 1-to-1 max loss to max, profit scenario. And that is massive. The probability in your favor, okay, is just astronomical. And after you get outside of that range, right here and up here, okay, well then you can start losing more than 1-to-1. But if we go up 80 pips, a lot of times like the 100 pip wide ones, they're the ones that are 2 hours, you only got 20 more pips of potential loss, and the chance of it actually expiring up 100 pips is very low, okay, on any given day. I mean, the probabilities, the deviations, the statistics, I mean, we can just go down the list of reasons why that's rarely going to happen. Does it happen? Yes. Is it rare? Extremely. So just understanding those probabilities. I mean, Aussie dollar, on average, the expected move, basically about 68 point whatever, but about 70% of the time is 43 pips. Period. So if the average expected move is 43 pips, and we got 40 up and 40 down to break even, and 43 is the average expected move in a day, do you think that there might be a good way to use that kind of trade, especially on news? Okay? And they're not just a news trade, but the news is the easiest place to start doing them. But then you'll get addicted to them, and you'll just start throwing them on constantly. Okay? And so we go on, we look at these deviation levels, and we'll put those on there. And I look at my deviations. I throw those in, and I'll start seeing, basically, what does that mean? Well, I mean, from where the market's at right now, we had a big move today, okay? But that means it's going to fly all the way up past 3 deviations or all the way back down to settlement before the day's over. Pretty low probability in that happening. And, what kind of move did we get today? We got a bigger than expected move today. We got an 80 pip move. So on that, it would have been a 1-to-1 day. But how often does that happen? Well, about less than 10% of the time. All right, stay right there, and another great show after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.